We've all been there, seeing the latest investment, gadget, or money-making hack blowing up online and feeling the urge to jump in. Chasing trends might feel thrilling, but it's often a shortcut to financial regret. Hey everyone, Resilient is here again, and welcome back to House of Resilient. In today's video, we'll explore why following the hype hurts your wallet and how to build a smarter money mindset instead. Chasing trends means jumping into investments, purchases, or financial behaviors because they're popular or promising quick gains, not because they align with your goals or values. This includes buying hot stocks or cryptocurrencies based purely on hype, spending heavily on the latest tech or fashion just because everyone's talking about it, or jumping on get-rich-quick schemes and side hustles trending on social media. The problem? These choices are often driven by emotion, peer pressure, or the fear of missing out, rather than careful planning and fundamental analysis. Why is chasing trends dangerous? Here's what you risk. First, you risk losing money. Most fads burn out quickly, and prices often crash just as fast. Think about the dot-com bubble of the late 1990s and early 2000s, where trillions of dollars were lost and individual investors saw 80 to 90% losses. Second, poor long-term returns. Instead of steady growth, you get wild ups and downs that stress your finances. This emotional decision-making often leads individual investors to underperform market averages due to poor timing. Third, neglecting your goals. Spending on trends distracts you from what really matters, like saving for retirement, paying off debt, or building an emergency fund. This creates a significant opportunity cost. Imagine losing $10,000 in a fad investment when that money could have been gaining $1,000 in a diversified index fund. That's a real cost to your financial future. Fourth, an emotional roller coaster. Buying high in excitement and selling low in panic can trap you in a cycle of loss, leading to significant stress and regret. Finally, liquidity issues. Many trendy investments, especially in nascent markets, can be difficult to sell quickly without incurring significant losses, trapping your capital. Chasing trends might feel thrilling, but it's often a shortcut to financial regret. Let's look at some real-life examples of trend chasing gone wrong. Consider the infamous tulip mania in the 1630s, where tulip bulb prices soared to astronomical levels, only to crash dramatically, bankrupting many. Then there's the dot-com bubble, where the Nasdaq Composite fell from over 5,000 to below 1,200, wiping out countless portfolios. The housing bubble of the mid-2000s saw people over-leveraging on real estate, leading to a global financial crisis when the market collapsed. More recently, meme stocks like GameStop surged from under $20 to over $480 in 2021, only to fall significantly, leaving many late buyers with heavy losses. And in the crypto world, fads like the Squid Game token, Squid, crashed 99.99% almost overnight, demonstrating the extreme risks of speculative assets. None of these trends are inherently bad, but blindly following the hype without research or a plan. That's where the trouble starts. Here's how you break free from the fad cycle and build a solid financial plan. First, define your financial goals. What are you saving or investing for? A $10,000 emergency fund? A $1 million retirement? Let these clear goals guide your decisions. Second, do your homework. Research thoroughly before any investment or purchase. Understand the risks, benefits, and alternatives. Don't just rely on social media buzz. Third, focus on long-term strategies. Build a diversified portfolio across asset classes, like low-cost index funds tracking the S&P 500, which historically returns 10% annually. Automate your savings to grow wealth steadily, and consider budgeting rules like the 50/30/20 rule to manage your income effectively. Fourth, limit emotional influence. Avoid making financial decisions based on excitement, fear, or peer pressure. Use a 24-hour or even 30-day cooling-off period before acting. Fifth, ignore hype on social media. Trends come and go fast. Filter your sources and don't trust hype without solid evidence. Continuous financial education is key to discerning real opportunities from fads. Finally, consult a financial advisor. When in doubt, get professional guidance tailored to your situation. They can help you build an emergency fund of 3 to 6 months of living expenses and plan for retirement. If you've already bought into a fad and lost money or feel stuck, don't panic. Review your situation calmly. Know what you own and its current value. Don't double down by throwing more money in to recover losses. Adjust your plan. Refocus on your core financial goals and build steady habits. Most importantly, learn from it. Mistakes are valuable lessons that help you grow smarter with money. Watch out for these warning signs that you might be chasing a trend. You buy something because everyone else is. You ignore your budget or long-term goals. You make quick decisions without research. You feel anxiety or excitement that pushes you to act fast. And you expect overnight wealth or instant gratification. Remember, true financial resilience comes from thoughtful planning, consistent effort, and a focus on your long-term goals, not from chasing the latest fad. If you found this video helpful, please give it a like, share it with someone who needs to hear this, and subscribe to House of Resilient for more insights on building your financial future. Your financial journey is a marathon, not a sprint. Stay resilient.